Good morning, everyone, and thank you very much for joining me. This is the morning market review. My name is Russell, Senior Market Specialist at FXCM, and my email address r@fxcm.com. Today is Tuesday. It's the 31st of May, 2022. Just going to go ahead and bring up the high-risk investment warning, and I'll keep this on screen for a few moments. Good morning, Zanetta. Nice to have you on the webinar as always. Thank you very much to everyone who's joined this morning. Much appreciated. And let's just bring up our market commentaries disclaimer. And here's our references, MarketScope 2.0, CNBC.com and TradingView. What I was thinking of doing this morning, and I'll be led by you guys, is perhaps just revisiting the scalping rules. I'm not sure if that's something that appeals to you guys. Otherwise, of course, we'll just do a standard morning market review. So let me know. But I think to start, we must get through the morning note. All right. So it reads as follows: European stocks set for cautious open as investors watch inflation data. European stocks are set for a tepid open on Tuesday after a hot German inflation reading reignited concerns about the pace of monetary tightening from central banks. It was about 8.5% yesterday. It was really high, which is unheard of in Europe, right? So that was a big number that came out yesterday. Fresh data on Monday showed that German EU harmonized inflation came in, I beg your pardon, not at 8.5, at 8.7% in May, significantly outstripping analyst expectations of 8% in a Reuters poll. And that's a big increase from the 7.8% seen in April. May's initial flash inflation prints were due from France, Italy, and the broader Eurozone on Tuesday. Investors will be watching closely for indications as to the speed and scale of interest rate hikes that may be required from the ECB from July onwards. Just in that regard, President Lagarde did blog post last week. They are lifting off in July. She was quite adamant that they'll get to neutral and past neutral depending on the inflation outlook. To be honest, I'm not sure just how realistic that is, given the fractions within the ECB. But that was the blog post last week. Global markets also reacting to another jump in oil prices after EU leaders agreed late on Monday to ban 90% of Russian crude by the end of the year as part of the bloc's sixth sanctions package against Moscow since the invasion of Ukraine. Shares in Asia Pacific were mixed on Tuesday as data showed that Chinese manufacturing activity contracted again in May amid the country's COVID-19 lockdowns, but at a slower rate, indicating some progress towards normalization. US stock futures rose tentatively in early pre-market trade, looking to build on last week's momentum after Wall Street was closed on Monday for the Memorial Day holiday. I've got two different, one saying the review, one saying do the scalping. I'll see perhaps if we can maybe put both in. I'll see if I can make time for both. All right. Let's take a look then at oil first. I'm going to use TradingView because my UK oil looked a bit odd this morning. Let's just get this. Okay, let's just bring up From where am I getting the news, Katie asks. I'm getting it from CNBC. So I'm just reading if you just log into cnbc.com, you'll see there's a scroll menu. I'll see if I can find it for you. And I'm just picking up the European news. I'll show you in a moment, Katie. All right, let's just take a look at, first let's take a look at US oil. Let's go down to the hourly here. I want to get this here. All right. So Katie, just to give everybody an idea of where I'm getting the news. So it's from CNBC, and then I'm just clicking on this call here. European stock set for cautious opening. Okay. And kind of just watch this throughout the day. There's a few other websites I look at, Forex Live. My Twitter feed's always up. I've got a subscription to Barron's, which gives me a subscription to MarketWatch. We have a subscription to Quayfin here. So just a few different places, but this is pretty good. Twitter, if you follow sort of the right news outlets on Twitter, that's pretty good as well. And then also just in the background, I've always got, I'm in my sort of office at home at the moment. I don't have my television's not in the office, so I just put the Bloomberg radio on in the background. That's kind of what's playing. All right, so just an article that we wrote yesterday. I'll bring that up. Okay, and it was this was posted to the Telegram channel. All right, let's just bring this up. All right, so this is our website. This is FXCM.com. This is insights. So you want to go through the insights. I'll just go through to the insights page here. And we try and sort of keep this as as updated as we possibly can. At the moment, it's just Nick and I that are posting, but this will expand. This is where the morning market review goes. So this is yesterday's morning market review. But again, I put all of this on Telegram. When Nick's articles come through, I'll pop them on Telegram. When my articles come through, I'll pop them on Telegram. But this is something I wrote yesterday. And we just put in, so we're taking a look at the hourly chart. So this is the hourly chart, US oil on the left, Brent on the right. And I'll just show you this. So this was pretty cool. We put in a measured move for US oil at 120 and for Brent at 124. So we go through to WTI. We actually kind of hit their target, which again, it's the reason I want to show you this is because it kind of these targets work out at just enough times to keep you interested in making these forecasts, and we all know it's impossible to forecast. But here's the 120. The WTI oil was a bit strange when I looked at it on mine. I just want to see if it's any better over here. Yeah, get this weird kind of gap. Let's just try something else here. Yeah, so there's some sort of odd anomaly on the FXCM data. This is the trading view data, and you can see here we kind of we had a 124 level, and we had 123. So it's just sometimes these things work out, and then so. The reason I'm smiling, I just want to. So these are the tricks of analysts, right? They show you when their targets work out. They'll never show you when their targets don't work out, right? So just keep that in the back of your mind. This was kind of a lucky strike. All right. So that's, but you can see that oils is really moving. The big issue with oil is not really the hourly chart. The big issue with oil is the weekly chart. I'm using again just TradingView because I need to speak just to the data team. I'm not sure. I usually open up on my demo account, so maybe it's just the demo data that's odd. But the idea here is this is bad news. This is really bad news. What you have here is oil starting to climb at a much gentler slope. So let's just put in an RSI here. Right, we're not overbought yet. You see, when we hit this 130 here, right? What was this? 130. It was a higher 138. We were overbought, so it would have been. I think it would have been acceptable and fair to say there's probably some sort of limit, some sort of cap when we hit this 138. If you guys remember, I'll go back to the hourly, see if I could. It's a bit far back, but there was kind of a gap here. We looked, is it a exhaustion gap? And again, yeah, it kind of worked out. Yeah, it was an exhaustion gap, but that's been discounted. That's now through the system. The idea here is, okay, Rob, cool. So Rob's just saying that there was a data issue. All right, cool. Apologies, Rob. I'll send that email in. I'm just making a note of it, and I'll get that sent through to our data team. Okay, but so I've made a note of that, Rob. I'll get that submitted. The point is that we're not overbought here. So there's no the cap. The technical cap, the price ceiling for this leg, you know, it's not in terms of market access. Now, again, that doesn't mean oil can't come down. Of course, it can come down. It really depends on the news that gets released throughout the day. The issue, of course, is though. When there is some sort of technical overbought, there is a risk. It's always kind of a risk-reward type of assessment once you go into an excess on the RSI. The risk is that there is probably a ceiling or some sort of near-term high that's probably going to lead to profit taking. We'll hit the next higher trough. Then the next leg starts, and that's what I'm worried about. I'm worried about this being that next leg. I'm worried about this being that next leg. So what's the big deal here? Is this is the stagflationary issue. Let's just add in a stochastic as well, and we'll see that the stochastic here is also showing signs of momentum increase. So let's just pop that in. You can see that it's turning. Let's just put a vertical in here. It's turning. If we hit this 80 level, if we hit the upper quintile here, that is hot momentum. It means that there's an underlying momentum, and once momentum catches onto a market theme, it runs until it effectively runs out of steam. When we get these long sort of movements here, see this long kind of movement here, and I think this is probably the best example. We get a long. This is a very gentle move here, but as long as we stay in that upper quintile, the movement is up. So imagine we hit the upper quintile now, Imagine we hit the upper quintile now. We're not there, but we're kind of turning towards it. We're not overbought. You know, where is this going to end? Where is this going to end? So we've hit the target 120, you know, which was lucky, if anything. But what's more important than targets is trend, because trend, especially on the weekly, reflects underlying fundamentals. What's the underlying fundamental here? Well, we've got a number of factors in play which we need to acknowledge. So if we kind of get something like this, so the next higher trough, the next higher peak again, you know, where's this heading? Is this heading towards that 140, 150 level? What's the factors that are in play here? And I think they're obviously quite powerful. The first one is there's a supply shock. So the fact that there is disruptions in supply immediately makes an excess demand, because the supply is not there to meet the demand. So the shocks on the supply certainly, as a result of the Ukraine, the invasion by Russia of Ukraine. But it's not only that. That really heightened and exacerbated a situation where there was already a shortfall, because there's not enough refineries out there. The refineries are all old, and there's just we haven't reached pre-COVID supply. So the supply shock exacerbated an already dire situation, and now there is, of course, the bans. When I talk about the conflict, I mean, we can include the ban from the US. Now we've got this ban from Europe. That's exacerbating the supply. And then China. So you've just got Beijing and Shanghai, which have just started relaxing their COVID lockdowns over the weekend. And the relaxation of the lockdowns there is going to see the manufacturing manufacturing pick up. I would suspect quite a great deal. Well, that's the demand side now, okay? Because China is a huge consumer of energy, right? But the demand wasn't there during very strict lockdowns, which are now starting to relax. So you've got the supply shock, and now you've got demand coming back online. Well, you know, to me that is the fundamental support for oil. We're just using Brent as the proxy, but you know, the idea here is, even if we go through to the US, we'll see similar, and we're looking at long term here. And as long as there are these fundamental factors, which I don't think are going away anytime soon, you can see that there is a strong pull. We're taking a look at the US side of energy. Here's the pickup, okay? And of course, here, no, we're not overbought again. So we're not overbought. And so last time we had the sort of very sharp move. Well, it moved overbought. It put the cap in. It was just a matter of seeing when the energy ran out, because sentiment can run longer than expected. But it ran out after this jump here, pulled back, and now we're starting to see the movement up again. And the technical position here, as opposed to sort of what we hear in terms of market pundits, the technical position is that trends remain in force until they effectively end. And it looks as if we've been trending in oil, for literally since the bottom in 2020. And here you can see higher trough, higher peak, higher trough, higher peak, trough, higher peak. So the next higher trough, where's the next higher peak? And so the trend's pretty much in force, but it's not there because of technical it's not a technical reason. The technical is reflecting the fundamental situation on the ground. What's the fundamental situation on the ground? Fundamental situation on the ground is there is a huge excess demand, and that excess demand is leading to price pressures. So we'll see how this gets resolved. Obviously, OPEC is meeting on Thursday. They've been pretty sort of steadfast and not wanting to move off of their timetable. But one of the things that they did mention is they don't want to move off their timetable until China comes out of lockdown. Perhaps that gets discussed. Okay, perhaps that gets discussed. So maybe OPEC Plus comes back on line in terms of increasing production, and that will relieve some of the pressure. But again, not all the OPEC members have that excess capacity. As far as I'm aware, the Saudis have the capacity to increase production. The UAE has the capacity to increase production, and that's about it. Everything else is too old and hasn't been updated. So it's not easy just to push up supply. The refineries have to come online effectively and be rebuilt. Yeah, so Rob saying Bloomberg estimates that Russia is selling oil to China at $34 less than the Brent. They also said that the ban on oil via ships will cost Russia $10 billion per year in lost revenue. I think the Russian economy has been absolutely, it's kind of been given a gigantic uppercut. There's no doubt about that. The Russian economy is reeling, and that's self-inflicted. The idea here, though, is yes, there is the Russian oil is at a huge discount. I think India is taking on Russian oil. I think China's taking on Russian oil. There are calls for India to kind of come to the party, and if it does, that's just going to push the price of oil up, possibly even more. And it's saying, and refineries can only process one kind of oil. So I mean, I think the ultimate story here is this is really, really worrisome in terms of our inflation. Now, I think in the same discussion here, we should just put up the wheat chart. Let's just put up the wheat chart. And it's saying, I thought Russia's oil revenue has soared since the ban. I'm not. I'll need a double check on that. I don't. My initial thoughts are that it hasn't. Russian oil has generally been shunned. No dealers want to take on Russian oil. No dealers want to take on Russian oil. And Russia wants oil to be paid in rubles. But let me just double check. I do know that inflation is running rampant in Russia. I do know that there's been a contraction to the point that they've probably lost about 15 years of GDP growth. I mean, they've really done some damage to themselves. All right, but I'll just my opinion there, and again, I need to double check, is that the oil revenue has taken a massive hit. But correct me if I'm incorrect. Let's take a look at the wheat chart. We may as well do it on this. Let me bring it up here. All right, let's bring it up here. All right, now take a look here. This is the other part of the stagflationary equation. And it's not that we can actually look at natural gas as well, right? You can see that we've got wheat. I don't want to go to the monthly, I beg yours. Let's just go to the. All right, so you can see that, well, it looks as if there's a resistance area here that's keeping it in check. This, of course, needs to be monitored as well, because the actual trend here is up. I would acknowledge we've got this resistance area here. So I'm not suggesting that there's not difficulty in overcoming the resistance, but what I am suggesting is that the trend's up. It's very easy to see that. just throw in the trough. Okay, remember why we don't take the peak from here. It wouldn't make a difference. I can put it in just so we don't get confused. Okay, and then you can see the higher peak. You can see here's the higher trough. And you can see here's the higher peak. And the question now, of course, is this leading to, and this we don't know, but I'll just put this in, a higher trough question mark, because if there is a higher trough here, then we would suggest the next higher peak comes in as well, question mark, because I don't know, but if that happens with oil moving up, well, that's dangerous, I've been listening to a few really good analysts, and one of the analysts said, well, stagflation was a theme that caught on, and once a theme catches on, it's very difficult for the market to sort of not adjust according to that theme. But I'm not convinced it's a theme. I'm not convinced it's a theme. Oil and wheat have to come down for it to be just a sort of a theme that plays itself out and disappears. We have to see the supply side normalize. Okay, let's just take a look at natural gas. All right, so you can see natural gas here is part of the issue as well. Okay, also we tended towards overbought. We're not quite there. Look at the stochastic. The longer the stochastic stays there, okay, the more dire it becomes. Let me just move this. The more dire it becomes, price of gas goes up. It's just, and it's interesting. I mean, it's the summer months in the north, So, all right, so you can see the issues there. And I think that we have to watch this very carefully, because when we look at, say, the DAX, we just come through to the DAX, which is a risk market. How does the increase in stagflation, let me change it again, the increased risk in stagflation affect, say, the DAX? How does the 8.7% affect the DAX? 8.7% inflation, right? So you can see we do have we're looking at this key level here. Now we've had a really good run over the last 4 weeks, but we've put in a key area here which we're going to monitor. Okay. This becomes now exceptionally important level because it's almost a crossroads. Why do I say it's almost a crossroads? Because if we break above it, then we get high trough, higher peak. Well, that's bullish development. If we kind of get a reversal like this, well, that's a lower peak heading towards another lower trough. That's a bearish development. So this level here becomes now, on a technical basis, exceptionally important. But fundamentally, the issue is how is the DAX going to respond to this? The ECB has to raise. ECB has. They're going to move from being a net negative. They're going to move to positive interest rates, right? Does that? And we know when we did the fundamentals for Nasdaq, KD asked, what's the fundamentals behind the Nasdaq? Well, they do apply to DAX as well. I don't think the DAX is as sensitive. It's not. Remember, it doesn't have as high a duration. What's duration in finance? Duration, sensitivity to interest rate changes, but it does have an effect. So it's kind of a low duration index, but it will still perhaps take a knock as rates go up. It's probably much more defensive. It's probably much more defensive than, say, the Nasdaq, right? So this now becomes key level, and let's just go down to the hourly. And on the hourly, we're actually starting to come back quite a bit. All right, so it's just daily. We're in zone 1. This last 4 weeks has been good. We are approaching this key level. I don't know how price reacts at this key level, but I am of the opinion it's a very important indication of which way markets are going to go. Now we want to see, is S1, S2 going to act as some sort of support, or does the market really get spooked by that 8.7%? Do we get an S3 day today? So it's a very, very interesting day indeed. All right, if there's any questions, just type this through. I'd like to, with your permission, just have a quick look at the scalping methodology. Unless there's anything else we need to cover, I just want to go through it. I think we'll only be able to do it quickly today, but we'll start revisiting it. So I don't see any other questions. So let's just go through the scalping methodology. It's just going to be a very high level, Rob, very high level, and then I think what we'll do is we'll start revisiting it again in a little bit more detail. So what we'll do is I'm just going to change the layout here. I'm going to open the scalping layout. All right, so there's a few pieces to this. There's a few pieces to it. As I say, we're going to do very high level today, just time-wise, but we'll revisit. We'll revisit, and you guys have my email address. You can email me, and we'll start just refreshing myself. So again, it's very much a part of top-down analysis. So we want to start on the daily chart. Now, the daily chart here is actually this indicator, which is more important than the price chart for scalping. So what is this indicator? And when I say it's more important, as per this methodology, it really comes down to your preferred methodology. So what we're looking at here is now take advantage, because it's not the slow stochastic which we generally use, it's the fast stochastic. Okay, and look at the number of days. 5. So it's basically 1 week, 5 days, right? The number of pairs, percent D, we don't look at. Okay, the percent D I've taken out. There's no line there. We only look. So we're looking at the raw number of percent K. It's effectively a very fast stochastic. It's a very fast momentum reading over the last 5 days. Well, which direction is it? Which direction is current momentum? Current momentum we're looking at NASDAQ here. It's just it opened up NASDAQ. So the momentum's down for NASDAQ. As you and I are talking, just in terms of the futures movement over the last sort of few days. Remember, America wasn't open yesterday, but right now, and because there's a lack of liquidity yesterday, there might be some sort of distortion here. But the point is, it's down. So now what we want to do is we want to go down to the hourly chart. We want to match the hourly with the daily directional guide. So the daily directional guide is down. Go through to the hourly. Now, with the hourly, position does become important. Now we can't ignore position. Position is in zone 3. Perfect. We won't be able to take a trade on NASDAQ unless the position lines up with a daily momentum, right? So we're in zone 3. That lines up very nicely with the daily, and we've got to get a look at the hourly momentum. Okay, this again, fast stochastic, looking over the last 5 hours. We're only looking at the percent K, not the percent D. We don't want any slowing down here. We want to know what is the raw momentum there, because it's a scalp. We want to know where we are with the current momentum, right? So current momentum's moving down, and our position is down. All right. Now we can go down to our 5-minute chart, and this is really now where we're looking to time. So there's 2 methodologies to enter here. There is the pullback methodology. So something like this goes 1, 2, and then we try to catch it down. So that's the one methodology. It's not going to apply here. The way that we get the the way that we get the trigger for the pullback methodology is we're actually looking not at price, we're looking at the RSI. Now this RSI, take a look at the settings here. Take a look at the settings here. Very, very fast 2. And then I like using a weighted. Okay, I don't think it makes really much difference which one you choose here, but as we developed the system, we tended to use the weighted. Okay, and what would happen is we would need the RSI to move back above 70, and then that would potentially be sort of a sell the rally in the fast momentum down. We don't have that. Instead, what we do have is we have a very fast moving market to the downside. So now we look at the stochastic. Now this stochastic is different. This is a slow stochastic. We've gone back to the 15, 5. We're only looking at the percent K. Forget about percent D. And it's moved into the lower quintile. It's just moved into the lower quintile. That is a potential. Let's take this as educational, not as advice, please, not advice. I'm not entering this trade, okay, at the moment. But so we would take a short here. We would need a stop loss. We would need money management, which we're not going to go through now. And you would hold it short until it moves out of the lower quintile. In other words, if it bounces out, well, then we're wrong. You might as well cut. The momentum's not there to make you money on the scalp. You may as well cut, right? But if it holds at 20, then there's money to be made on the scalp. I'll see if I can find some sort of. I don't see any recent examples, but that's effectively the methodology in a nutshell. I'm going to put this on Telegram so you can rewatch it. I will schedule some sort of live trade. Okay, that's where I'm going to conclude. If there's any questions, go ahead and post those now. Tomorrow is Wednesday, so we're going to have a shortened morning market review, and then we'll move into the crypto market. All right, nothing coming through, so let's end here. Thank you very much, guys. Have a good day, good evening. We'll chat tomorrow.